Okay, everybody, today we are going to take a look at how to spot the end of an upward trend, and we'll also quickly take a look at how to spot the end of a downward trend. Now, I know people say you can't call the top, and that's true, but there is some signs you can look for to help give you indications that a top may be coming. And for me, it all starts with Fibonacci extensions. So when we talk about drawing Fibonacci extensions, we're talking about drawing a line from an obvious low, what I like to call an obvious low, to a next obvious high point. And you might think the next obvious high would be here or here, but this is too small of a range to consider a real swing. And some are too large, like this may be too large, so we're going to use this high and this low. So drawing our Fibonacci extension is quite simple. We measure a line from low to high, and then we project it off of the next low. Now here, you might see one low, but then you might see a lower low. So you'll have to use the lowest low in this point. So this is our range. And we can see that here we push well past the 100% extension. We have a little blip on the 1282 extension, but we have a nice sharp step down pullback on the 1618. So if we hit the 1618 and step down, I'm going to activate the drawing and move it to that step down. And you'll kind of be able to tell if your Fibonacci extension is correct because you'll kind of hit these extensions quite nicely. See, we're obeying the 282 here, having trouble at the 618, and we're clearly retracing off the 100. So here, I know we come down past the 282, but we don't break this, so I'm going to use again the 1618 and take it off this step down. So take it off this step down off the 618, and we'll just get rid of this for now. We don't always have to move the extension after the 100%. You can see here the 100% isn't met. Let's take a closer look. So here we step down onto the 618, bounce up. So there's no real good step down to activate the Fibonacci extension and move it off of after the 100. So we can use this 282. Now remember, a failed 282 extension is a very powerful number that we can often use to short. I use a lot of failed 282 extensions to short, and a failed 1282 extension is really just 28.2% off of the 100. So let's take an even closer look here with the 10-day 10-minute chart. Now, things I always like to have when I'm shorting is a failed 282 extension plus a double top with the 50-day moving average and the VWAP rejecting price action. Now quickly, bear in mind that Tesla has seen an extraordinary run up. Pre-split stock prices were 210 to over 2100. In a 12-month period, this was a 597% move, which is extraordinary. I read an article the other day about a Japanese firm pumping up tech stocks. I can put the link in the article below, but it could be contributing to the extraordinary run-up that the Qs have had and the Nasdaq has had in the past, well, since coronavirus. So if you're going to do a short, you like to see a huge run-up, okay? Like 15% days, huge leaps. So looking at the 10-day 10-minute, let's take a close look and see if this meets the criteria for us to take a short position. So we have a double top. We have the 282 rejecting price action. We have a series of 3 lower lows, 1, 2, 3. And here I still would have been iffy about a short, but the start of this day would have been a very good indication. So we'll take a closer look at that. But so far we have 3 criteria met. We have a failed 282, we have a double top, we have an extraordinary run up, and then coupled with that, when I would have liked to open my short position is a VWAP and 50-day moving average rejecting price action. So we'll take a look at the 5-day 5-minute chart to see what would have triggered our entry and what would have triggered some exits. So right on market open here, you can see VWAP is rejecting price action. Okay. Now this in itself doesn't confirm it, but when we push up, nice red hammer, and then start to sell off again, that would have been a good time to make your entry, because you know you're making lower highs. Even your lows are getting lower. And your VWAP is rejecting price action, and 50-day moving average is trending down. So let's look at when this downward trend is occurring, how would you have been able to tell that it's going to reverse? Let me show you here. So if we took a measurement here and pitched it off of here, I'm going to make this purple so they're easy to tell apart. We can see we come down to the 100% level, or very close to, and then push back up again to the 618. So as we step down in the upward extensions, we're going to rise up in the downward extensions. And you can see we come to the 618, but we get rejected by it. So we're going to activate this drawing and move it to that rejected 618 line. So a rejected 618 Fibonacci extension in a downward swing is a very typical maneuver for downward swings. So we're going to look for that all over the place for the continuance of our downward trend. Now it doesn't always come to the 618. Here you can see we go down past the 1618 and come up to the 1282 and get rejected again. So we're going to activate our drawing and move it to the highest point on that upward swing in our downward trend. I know, confusing, right? So here we see we break the 1618 extension again and push all the way up to the 282. So in these very volatile times, you can see the volume is 5 million shares here in, the first 30 minutes. In this 10 minutes alone, we have 5 million shares, or 4.8 million shares traded in this 10-minute candle. So these are very volatile times. So when it's so volatile and we're making aggressive moves downward, we've got to trap in new buyers by having aggressive moves upwards. And even you get to a point where you're making higher lows and higher highs, so it looks like it's trending up. But again, if you took a Fibonacci extension and measured, you would see this would be a failed 282 in an upward direction, and this would be a failed 282 in a downward direction. So those two 282s coupled together can be very powerful. Now we'll go back to the 5-minute chart. So as we measure our Fibonacci extensions in the upward trend, like I said, and we'll step down. In the downward trends, we will step up. Now you see here we almost make the 100 again and swing high up to the 282. So we're just going to activate this again, and we're going to keep doing this until we see our downward swings become smaller. Okay? So here we're again making the 1618 extension, coming up to the 100, So we made a 1618 extension here. So our downward swings aren't getting any smaller. So we're going to be looking for evidence of these downward swings losing momentum. That will help us determine the end of a downward trend. So we're making the 1618 extension, pulling back up to the 100. That is our step up. So we're going to move our Fibonacci extension again to the high point. And here, it's obvious to see VWAP is rejecting the price action. VWAP's trending down, 50-day moving average pointing down, and we're starting to form like some type of falling wedge pattern here. But it doesn't look like a great one because you can see here price is dipping below the 282. Here prices were getting rejected by the 282. So none of those are good signs, and we're continually channeling down, making lower highs and lower lows. So all those things coupled together are not good. Now the next morning, for a minute, it looks like we formed a wave pattern and we're bouncing up, and then we're pulling back to bounce off the VWAP. Now originally when this candle opened, it was here, and it's pushing up like this. So we're moving up off the 282. We're actually moving up off the VWAP. The VWAP is underneath price action, and things are starting to look optimistic. But really, let's take a closer look. So we open here, we push up again, we open here, we push up, and guess what? It's all just a giant bull trap to suck you in again. So looking at an intraday chart, you might be suckered into buying things or bouncing off the 282. Looks like a good sign. We've had a healthy retrace, but you can't look just at intraday charts when determining a trend, because if you're looking at this Fibonacci extension, you can see this is again a failed 282 extension. So we're just pushing up to validate this 282, to trap in new buyers, and then to flush hard. So let's just extend this to the right. You can see this is well in line with the 282 extension. So just because you're starting to push up, these guys are designed to trick you into buying. So don't let that happen. And if you do let it happen, make sure you cut your losses quickly, because when we start to flush here and the VWAP starts to reject price action, you have to cut your losses immediately, because your thesis of an upward trend being intact is flawed. And if that's your methodology for making an entry, then that has become invalid and you have to change your plan immediately. So, seeing on our new step up, we're going to activate the drawing again, move it to our new high, and we can see we push well past the 1618. Just for interest's sake, let's edit the properties, see if we hit the 2618, and my God, look, we hit it exactly. And for reasons like this, I wonder why people trade any other way than using Fibonacci, because it's so accurate that I just need these lines to feel comfortable making entries or exits or determining profit targets, because to me just eyeballing it seems ludicrous.